slowed a little bit, but still look good. US looks good. Most of Western Europe looks good. The UK looks great. Which regions are you worried about now?
Well, to be fair, it's a bit better than it was in certainly in Q1 and Q2. I mean, we had 5% growth, like-for-like growth in Q3, which exceeded analysts' expectations by some distance and competitive comparisons by some distance. So that was pleasing. I guess I still remain concerned about Western Europe and parts of Western Europe, not the UK, not Germany, France, not Spain actually as much, although there's this terribly corrosive high unemployment level in Spain. Things are improving. Italy is a bit rudderless. So I think my basic concern is still Western Europe. I'm obviously concerned about the US. The grey swan I worry about most is the US deficit, the failure to deal with it on a permanent basis, or as permanent as they could be. This kicking the can down the road doesn't help. I mean, if you're a client in America, what do you do expecting another blow up with the extremes of the Republican and Democrat Party in January and February?
When do you think we will see the caution surrounding all of this stuff in the US coming through into your numbers and into the numbers of the industry?
Well, I think, we've been at this for 5 years post-Lehman and we've got used to it. I mean, 2009 was a dreadful year, picked up in 10, 11 was a record year for us, and 12, and if we keep our noses to the grindstone, 13 will be a record year as well. 14 looks a little bit better. You look at the GDP forecasts, Axel, you look at Goldman at about 4%. You look at the Business Council last week in Menlo Park in California saying 3%. Add inflation is, the forecasts are quite strong, and that gives us a little bit of pricing power for our clients and helps us. So if we see nominal growing at 5 to 6, we have to make a correction because our weighting is not the weighting of the worldwide economy. We're stronger than anybody else in Asia, but we're not as strong as the worldwide GDP. So you make a correction of about 100 to 150 basis points. So it's 3.5 to about 4.5 in terms of industry growth. If advertising stays the same proportion of GNP, that's not healthy, but it's not unhealthy. It's middle of the road, and we can manage on that, and it'll be a little bit stronger than this year because of Sochi, because of Brazil, because of the midterm congressionals. So listen, it's not easy. Our people are doing an extremely good job. They're working very closely with the clients. The clients are very cautious for the reasons we just touched on. But having said all that, it's manageable. It's tough, but manageable.
How manageable is sterling right now? Clearly, I think it's about 80-85% of your revenues outside the UK. If sterling continues at these levels, how worried are you by that, and when does that really start hitting your bottom line?
Well, obviously, the sterling and its relative weighting. I mean, from a management of revenues and costs, I mean, we're matched. We're sort of naturally hedged, so it doesn't worry me from that point of view. From a reporting basis, obviously, variations in the currency rates affect our numbers, but if actually it's an interesting point. Fast growth markets on a constant dollar basis would have been over 30% of our revenues as opposed to just under 30%. So it does start to make some difference on the numbers, but I'm not worried about that. The analysts take that into account, and if sterling weakens, obviously we benefit. If sterling strengthens against these currencies, we're not such in a good position. China is now our third largest market, Axel, so at $1.5 billion of revenue and with about a 15 share, we're in a very strong position there, and the RMB continues to strengthen. So all in all, it goes with the territory, and it's not something that I'm highly focused on. We don't have exposure anyway on it.